always, as the investor, your number one goal should be protecting your investor's capital. Okay, if that means that you work for free for 4 years in order to make sure your investor's capital is returned, sometimes you got to take one on the chin. That's what you got to do.
Yeah.
So by bringing in that rescue capital, whatever you negotiate with that superhero, okay, that's going to save that project, okay, that's what's going to determine how much of that equity you're giving up, but you're also putting them in priority. Okay, so what happens is in a preferred equity position, remember how I just talked about that graph? That lender's still going to be in first lien position. They have $7,000, okay? But in order to refinance, in order to restabilize this asset, that preferred equity guy's going to say, I'm going to give you the $2 million you need to buy down your debt, but now I'm going to be in second position.
Well, basically,
it's like
you come in
financing.
so they're coming in with because like the three Tim Harriages that were a part of it, they don't have a lien, they have equity on the property.
They have equity in the property, correct.
So the preferred equity, when the rescue capital will come in, not only do they have equity in the company, but or in the project, but they also have a lien on the money as well?
Well, it's the waterfall. So basically, imagine this.
They're just moving up on
Originally, the bank was first, and then the three Tim Harriages were second, and then everything beyond that, the three Tim Harriages and Robert were splitting, right? Well, now he called the three Tim Harriages, and they're all like, "Man, we don't have it. We're not putting any more money in your train wreck deal."
Right.
Well, then Ryan Harper steps in and says, "I'll give you the $2,000."
Right.
But then now you just bump those three Tim Harriages up, and you're in between them and the bank. So it dilutes, in essence, the original investors. So the deals that I'm in personally, that I've been diluted in, every one of them, I said, "No, I'm not giving you any more money. I don't believe in your model anymore." And actually, frankly, I've kind of like written them off completely in my head.
Right.
They all raised rescue capital or preferred equity, and all the scenarios are basically what Robert said: I will be lucky to get my money back.
Right.
So they will have had my money for 6, 7, 8 years, and I may get all my original investment back, which in today's dollars, as an investor, I'll just say, that's like losing 8% a year. So I won't get all my real dollars back. I'll just get the actual
I don't want to say it's the worst case scenario, because the worst case scenario is zero, is the GP turning the keys back into the bank.